Before we actually start with the main event and with an interview with Skye, we're gonna hear from an amazing company called Insider CX, and I'm gonna invite the guys to come speak and give you a pitch. And again, if you guys have any questions for them, please feel free to ask or whatever you want. So give them a round of applause.
Hi everyone. I will try to keep it light. I'll make no promises, Vedran. So I'm going to talk a bit about who we are and what we do, and then I'm going to say a word or two on product market fit, because it's one of those debates I could go just for hours and hours on it. So what we actually do, what our mission is, to make patient opinion what counts in private healthcare. There's a bunch of reasons what's wrong with it currently. I will not go into it because it's not so interesting. I will just share what we do and what our clients, so private healthcare operators, get out of it. On one hand, our core business is mobile-based feedback, so we try to give our clients, especially private healthcare clinics, groups, etc., a lot of data to make their decisions on. So usually using our system, they would get 1 of 5 patients filling in the feedback form, which can sometimes have up to 20 questions. They then use that data on one hand to ensure good quality. So imagine if you're a COO of a hospital group with 15 locations and 120 doctors, you'll be able to see in real time that Doctor 1 has not so good communication with their patients and able to act on it instantly. On one hand, to improve the problem. On the other hand, to make sure that the patients do not churn. And last, what we are experimenting with for a while is what we call outcome booster. In this case, we send summary messages of the last therapeutic appointment to parents of children. So teenagers, they come for like an orthodontic checkup and whatnot. They do not listen to the doctor. And what we try to do is relay that information back to the parents to ensure a good therapy outcome. How it works, so kind of a technical scheme, but bear with me. The base of everything is a touch point that happens between the clinic and the patient. So it can be like a medical exam, operation, something like that. Then we connect to their system, send white labeled invites through a combination of usually WhatsApp and SMS. So you can do some really good stuff with it, and it gets some really good response rates. Once the patients answer the survey, they can either log into our portal to see the data in real time, but we also push it to other systems. For example, we have a ticketing system, so clinic managers, front desk managers, every day when they log in, they have a backlog of usually very unsatisfied patients that they have to deal with. So before, they were like really in the dark. Okay, if somebody didn't come back, they churned, now they know why, and basically can act on it. So that's the part about what we do. I'm going to talk a bit about our product market fit, or how we're trying to achieve product market fit. So the chart shows our revenue in the last 4 years, and some milestones where we thought that we have hit product market fit. So the first was in end of 2021, after being about a year and a half in the market, burning through all the savings. We got some deals, and we said, yeah, that's going to be really good. But the market demand just it didn't endure. So in 2022. The same thing happened. We got some quite okay deals, but it turned out it was a wild ICP mismatch. So some of the things we have learned upon, and some were just a bit idiotic, unfortunately. Sorry, Ritsa. And once it took off, so here we pivoted to exclusively private healthcare. Things looked really good until we hit a bit of a slump when we realized our pricing strategy is way off. So we were really proud that we were winning almost 90% of the deals. But can you see what's wrong with having such an amazing win rate. Yeah, too cheap. We had no price objections. So except of that, then came the scaling challenges. So we scaled up to other countries, other languages, other legal frameworks to adhere. So we also struggled with this a bit. And now we're waiting for the next product market fit monster to grab us. And what I think will also relay with Vedran, that it's not a one-time thing. You just achieve it and now you're golden. You're trying to achieve it all the time with the current product and the current market that you're on. And that's something I like to show, and what we have like inside the office. So the pins are the locations of our actual clients. So that's how we started, covering Zagreb, then going out a bit, trying other markets like Slovenia, a bit southern Croatia, then Serbia, Bosnia, and where we are currently now, except of Balkans, also having about 20 clinics in Italy and in the UK. And my point being, although this looks great, it still doesn't mean that we have fully achieved it. We might have done it with the current product, with the current market, but yeah, there's a lot of stuff to do from now on, and trying to scale it up. And that's all for me.
Anybody has any questions for him? There you go.
Yep.
Did you do any piloting, or do you think you're gonna be having to do it in some point of time?
Yeah, so we started up as a weird Frankenstein of hardware and software. Then we pivoted just to software, but for e-commerce. And then we pivoted just for software in hospitality, until we found the best use case in healthcare for a myriad of reasons, but we've pivoted along the way a lot, but I think we won't pivot in at least 2 more quarters again.
And what about the pricing strategy? How did you change those rates?
Yeah, so once you start with the pricing strategy, you obviously think it's very simple. I will see my cost, just add up so I have a nice SaaS margin, but it doesn't work like that. We had, not anymore, but we had deals that we were just losing cash on after 6 months because we didn't set it up correctly. We found our value metric, so the metric that basically gives the value, and that's the number of patients. The higher the number of patients is for a clinic, higher our revenue, and vice versa, higher the value that they can get from 10,000 responses of patients per month versus 200 responses. So it was about really trying to find that metric, which was very obvious in hindsight, but back then, yeah, we just didn't decide fast enough on it.
Yeah, 2 questions. What did trigger the idea? I mean, what kind of a trigger did you have to basically come up with the idea? And the second question is, how much does the product correlate to original idea?
Yeah, it does. So that's my background is in market research. I've had to set up a similar system for 2 multinationals, so working from the inside, first in retail, then in online gambling. And in the first iteration, I was like, okay. In the second, I have to do it again. The third one would just let's build something better, and then try to sell it. So it's still on those tracks.
Do the companies use the data to improve their service?
Yeah, they use. So we obviously track product usage, do customer success with them, and they're very, very actively. Some even have SLAs for their clinic managers. In the case of a hospital chain in UK, the clinic managers need to respond to the patients in 12 hours, and we also track that in our system.
And did you pick geographic expansion like randomly, was it opportunistically, or was it very focused?
It was focused. So what you didn't see was all the lost deals in Germany that we spent 3 to 4 months on, and not a small amount of money. So we went targeted with the region, and then England, and now Italy.
And why Germany didn't work?
They seem to prefer the status quo, and they will not deal with a vendor that is not local. Being on the buyer side in DACH, so in my previous, there was this kind of an unspoken rule that you deal only with local vendors, and they're not so prone to risk and changing the status quo.
Interesting.
Anybody else? Nice. You got the most amount of questions. Okay, thank God I don't have to wear this one anymore. Let's get Skye situated. Just work the mic however you want.
I don't know where to sit.
Whatever you
Weird.
want. So, again, thank you, Nicola. Funny presentation. We probably could have kept the slide, the PMF slide for the background just for this talk, but also a funny comment about Germany. Our experience is roughly similar. I think we should get a German VC one time to try to analyze why.
It's my experience with German, the German market too. So.
Yeah. So thank you all again for kind of coming. I have to do a couple of things. There's drinks, snacks, whatever you want, alcoholic, non-alcoholic. There will be pizzas later on served in that room. There'll be probably even more than all of you will eat, so don't worry about it. And you'll get to talk to Skye after, of course, the session ends. But for now, one thing I think, I don't know how many of you have been before on these events, but generally we've kind of talked about essentially getting to this point of essentially raising your first round, creating a pitch deck, trying to figure out who your investors should be. And now I wanted to talk a bit about the PMF stage, because I think it's probably the hardest stage. It's also the most confusing stage. And when I met Skye beginning of this year, I thought who better to cover that than investors who usually invest at that stage. So, I think by now we all know how to build a product, how to pitch to investors, how to raise your first round, and essentially I want to explore the product market fit stage. Generally, I'll let Skye do the talking, but and of course intro herself. They've actually invested in a Croatian company called Fonoa. I don't know, many of you probably know them. They usually invest in the PMF stage, so we can actually kind of, before we dive into the topic, if we can, if you would like Skye to give an intro about your background, what did you do before VC, how did you end up in VC, and what's Dawn all about?
Perfect. Well, thank you very much, first of all, for the invite. Absolutely delighted to be here and part of such an exciting meetup. As Vedran mentioned, I'm Skye. I'm one of the investors at Dawn Capital, based in London. It's safe to say I've had a kind of meandering route into the venture world, but I've always loved startups. So I trained as an industrial engineer, but very quickly realized that life in factory towns in rural England was not going to be for me. And so kind of didn't really have a plan, but I'd always worked in startups throughout university, be it doing guerrilla marketing for a half marathon, kind of bringing together networking events for founders. So I kind of graduated, still didn't really know what I was going to do. And so thought, well, I'll just kind of sell my soul to consulting. What's the worst that can happen? But had that startup itch just to scratch it one last time. So spent 6 months working at a startup, just as COVID hit. So a very interesting first world of work, fully remote team, scaling phenomenally quickly. I'll chat about it a bit later. We went from 20 to 80 people in 6 months, which is certainly an exciting time to be in a startup, but also means there's not a huge amount of sleep going on. I then, as I say, went to the other side. I was at Bain for nearly 3 years. I spent about 1.5 years doing promotions and pricing in retail, and then 1.5 years doing B2B software diligence for private equity companies. Super interesting, loved looking at, very different businesses. I did from cigarette filters right the way through to HR software and everything in between. But really missed the human side of working with startups, and that what gets a founder out of bed might not get me out of bed, but it's what you guys all do, and loved hearing those stories. So Dawn Capital was a really nice fit for me to kind of move on to as my next step. So we're based in London. We're Europe's biggest B2B software fund. We're currently investing about our 5th flagship, which is about 700 million, announced it at the end of last year. And despite it being a really tricky fundraising environment, really pleased to have such a fantastic fund. And we invest in the next generation of Europe's best founders that really have global ambitions to scale, not just from London and Paris, but very much from right the way across the European region. As Vejin mentioned, Finoa is obviously one of the companies we've invested in here, but we've got the likes of kind of Contexa, Calibra, Dataiku in our portfolio just now. Had very early kind of big exits with the likes of iZettle in the payment space, Mimecast on the email security space. As I say, really love just kind of championing people, helping them accelerate that growth across Europe and then globally. In terms of kind of our sweet spot, when we might be writing you checks, we come in at Series A and B when you've got this elusive product market fit. Would typically write checks of 10 to 30 million, and then really double down right the way through to IPO. Love working with all of our founders. We're as hands-on as at least you're willing to let us be, and really engage with you on that journey.
Nice. By the way, I've already told you I've heard the best things about Dawn, so always glad to have really nice funds here. You did skip one part that we talked in my office, how you were a delivery driver and got fit for 6 months. That's an amazing story. I guess life takes you everywhere. Yeah. But now that we've gotten like the pleasantries out of the way, we can essentially start talking about what exactly product market fit is, and what it actually means for your average run-of-the-mill company, and why it's actually so important to a particular future for any startup. So what are your rough thoughts? How would you define it?
I'm really glad you put it that way, because you kind of half answered the question for me. The difference between product market fit and not is being an average run-of-the-mill startup and not. Don't quote me on it. Somewhere in the darkest depths of the internet, it said 10% of startups get funding from VCs, only 3% get to product market fit. Now, you can go and ask ChatGPT or whatever if those numbers are right, but I think it really shows that you differentiate as a startup. And in terms of what it actually is, we think of it as really strong alignment naturally between the product, the market, and the go-to-market. So how can you reliably solve an urgent pain point for a consistent customer? In terms of those customers, it doesn't necessarily mean you're always selling to the head of product or the head of customer success. It's they're united in having that same pain point. Secondly, that pain point really has to be an urgent one. You can probably sell a chocolate teapot to anybody if you give it away for free, but are people going to keep coming back for more? So it's really having that kind of reliability that your product nails that pain point for them at the point of need.
So in theory, it should be relatively easy, right? You go to a customer, you solve a problem that they have, and they essentially pay you money. So why does it not work like that most of the time?
Well, I wouldn't have a job if it was that easy, for one.
Of course.
It's definitely an iterative process. So the first point is, are you talking to the right customers? Is it that actually, you're talking to heads of product, but they all have very different pain points that you're trying to address with the same product? I think we've seen it sometimes in our portfolio real when we've maybe had to revisit things after our investment is you've brought this product, we've looked at their metrics, they're great, and we actually realize afterwards everybody's using the product in a slightly different way, slightly different use case. And in those instances, do you actually have product market fit? Maybe not quite. So are you speaking to the right customers in the first place? Secondly, around that kind of urgency point, like, can they live with it? Are they kind of, they've accepted that something's the status quo and so aren't really willing to take that risk on adopting something new? You know, nobody gets fired quite often for, you know, choosing to use Gmail in comparison to, you know, a startup. And so do they have that urgency? Do they have a budget that they're potentially going to be able to spend on this? Again, you know, if you're kind of really fighting uphill, it's a, you know, you get the category creation, and we'll come on to that, I'm sure, in a little bit, but do they have that urgency there? And then finally, I think it's not necessarily always thought of first because it's product market and we don't think about go-to-market fit necessarily, but are you meeting them in the right place? And in particular, the pricing model can be so critical. So again, I can think of one of our portfolio companies that we're thinking with a bit right now is that payment model. They're looking at currently, they've got a usage-based pricing model and actually are losing sometimes in RFPs to competitors who actually are more expensive, but the pricing model is just seat-based. And it's so much easier for their buyers to understand. And if you're not meeting people at the point where they can kind of easily understand how's your product solving their pain point in a way they can use it, then you're, again, fighting that uphill battle.
I agree. I think we fight. I think you mentioned nobody gets fired when they use Gmail. For us, we oftentimes hear like nobody gets fired for using Datadog, and Datadog's pricing is example everything but easy to understand. So I guess when you do go past that stage, you can mess with pricing however you want and make it as complicated. You can actually get away with it. Now. So it seems like things like positioning, go-to-market strategy, I think like Nicola mentioned, branding and similar things are also very, very important because you probably can have the best product in the world, but if you can't actually, you know, get it to market and get it in front of people, it almost doesn't even matter. Would you say that's the case, or?
Yeah, definitely. I think, again, coming back to the alignment point, and at Dawn, we've got a handy framework, which I'm hoping is going to appear behind me in just a second.
Show the framework now. Yeah.
That, as you say, it's not just product and market, it's go-to-market as well. And I'll pause while it comes up. Oh, perfect, thank you. Just while it comes up, I guess one point that you just mentioned there that we're actually seeing slightly more and more is around branding and reputation. Okay. That's something I think previously people kind of thought of as a kind of, you've got go-to-market, you've got product market fit, then we'll think about our brand. We're seeing people think about that much earlier and earlier. I think part of product market fit is having evangelical customers that kind of do the selling for you.
Okay.
You've got to make sure that they're selling the right thing. Like if you've got a confused brand, they go and tell all their friends, and then those people come and are disappointed, then something's really gone wrong. So actually, it's
so you have one opportunity, right, to get it essentially right before they start telling the world.
It's not to say, you know, you have one shot and it's a never again, but you certainly want to kind of be thinking about it earlier on in that journey.
Okay. The slides are up.
Perfect. So this is something that usually we also use with our portfolio companies once we've invested and they're thinking about, you know, new product launches, but I think also very much applies at an earlier stage in product market fit. So we've kind of got 6 main levers, and then you can be red, amber, green in each of them. Firstly, 2 within market. Is there a substantial market size? You know, if you're making some really niche product that only 10 people in the whole world are going to use, it's probably going to be great for them, but in terms of venture investors, that's probably not something that we're going to be interested in. So looking at, are people buying a competitor solution already? Particularly from the B2B software space, we're really keen on, like, are you selling large contracts? Implies there's a kind of large market size there. Secondly, the point around budget, that if a budget already exists for something, that's, again, you can create new budgets, but it's trying to help people understand that they have a pain point. If there's a budget there already, it's a good sign towards there being a market for you to sell into. Then the second point is your tech and product, and this is when it slightly comes on to you as a founder and the team that you're building around you. So firstly, kind of, do you have the fundamental technology? And again, apologies if you're a B2C founder, come and grill me afterwards about what I might know. But particularly in the kind of tech space, do you have the kind of tech chops to be able to outperform the competitors that are already in the market? And then kind of partly tied to your tech, do you also then have the tech team to continue building that moat around you? So really thinking about how can you differentiate on the tech side. And then finally, this go-to-market. And this is something that, again, is very much in your control as a founder, co-founder, are the employees, and then as you start to scale your team. Your go-to-market synergies, thinking about, which buyer persona are you targeting? And this is kind of making sure, again, that point around those customers, have you understood what their similar pain point is, and are you going after the right people? And in terms of your sales motion, are you meeting them where they want to be met? I'll let the developers in the room speak for themselves, but traditionally, apparently, developers don't want to be sold to. They kind of want to find something for themselves, put their credit card details in, play around. So making sure that you've kind of got that match in terms of kind of aggressively targeting people or letting them discover it for themselves. Do you have a community that are really evangelical? We see that a lot, for example, in the design tools space. People learn about something and then kind of organically spread it. So making sure that you're matching these together. So coming back to alignment, I'm going to give, ideally we'd love everything to be green, but this is reality. Life is not all perfect frameworks, even though I'm a consultant. And so we'd ideally look for alignment between at least two, but more, I think, understanding when things are going wrong, why are they going wrong? And there's kind of three main pitfalls that we see. So the first one is kind of the envy, the hopping on the hype and this is something that I think we really look at a lot right now with a lot of AI companies. So we've seen there's a big market size. Everyone's excited about AI. People have budgets potentially for this, be it experimentation or actually kind of moving on to their kind of everyday use. But you don't really have that product and tech superiority. And again, it's like, do you have a really strong team with AI capability and research? In terms of the internal capabilities, AI, again, is such a fast-moving space. So we really look at, do you as a founding team understand the problem in a way that's different from other people? And potentially, again, how you can build that tech superiority is around if you've got data sets that are proprietary to you, or do you have a way when data goes stale really quickly that you can make sure you're moving faster? If you don't have this, then again, there's excitement in the market. You can maybe do your 0 to 1 million journey quite quickly, but building a kind of long-term, sustainable, exciting business is quite tricky. I think the second one is around being overly optimistic. And there's kind of two ways that this can go. When there isn't really a market there and there isn't really budget for it. You can make, again, going back to it, the best chocolate teapot in the world, but if fundamentally people aren't interested in buying it or don't have money to spend on it, again, it's an uphill struggle. So here there's kind of two ways to go. Firstly, you're either solving the wrong pain point in particular. Again, people famously say they don't want to buy a drill, they want to buy a hole. And so making sure that you're actually solving what they need. There is the flip side that you're going after category creation. And again, I guess the iPhone is the historical example of this. Nobody knew they needed it until they needed it. This one, you get the moonshots, but again, making sure that you have that strong vision of what are you going after? Why will there be a market for this in the future? And why will there be budget for it in the future?
Do you guys do research on that as a company, or is it up to the founder to prove, hey, I'm going into this new kind of market or something? I'm creating the market. Here are some of the proof points on why I think that's going to happen. Or is it you? Or both?
It's a combination of the two. I think as a fund, we're becoming a lot more thesis driven. And so we have, the moonshots that we're excited about, as well as, the boring industries that we're excited about being digitalized as well, where there's, less of this category creation, perhaps.
Okay.
I think if you are going after that as a founder, you definitely need to come in and pitch us a strong vision. We'll then go away and do our research to understand if we believe in that same category creation. But no, I think it certainly starts from the founder. And then finally, there's the kind of everything everywhere all at once, when perhaps you've made this fantastic product. In theory, there's this large market, but you're just trying to do everything for everybody. And so particularly we see this if you're not quite sure if you're targeting SMB or enterprise. Again, coming at it from a software angle, your enterprise customer usually wants to configure and customize absolutely everything. They have that budget to be able to spend on it. On the flip side, SMBs don't have time for that. It's kind of a couple of sales calls, sign the contract, off we go. But you kind of don't want to dilute your product value by giving this expensive tech to SMBs cheaply. And so at that point, again, coming back to that alignment, making sure you're going after one use case at a time, prove it at Series A, and then at Series B, we can maybe start to expand on that kind of product suite.
You're so right on enterprises wanting to customize absolutely everything.
So again, that's kind of when you look at the buying criteria of enterprises versus SMB, understanding which one does your product go after, and making sure then, your pricing aligns with that, your go-to-market aligns with that. So I think these would say are the kind of three big pitfalls we see people having as they come into their Series A. If you can get to, say, at least two of the big buckets lined up in green, then you're usually onto something good, and you can make tweaks to at least pull up into yellow elsewhere.
So it's okay to basically get in front of you and say, hey, we think we're not there yet 100%. We do know some of these things are right, but we're missing this, and that. And you guys will be like, yeah, sure.
Sometimes it depends. If you're coming to us in a small market with no budget, is quite difficult because at least at Dawn, the companies we invest in, we're looking for unicorns in every single one of them. If your whole market is 200 million, then we're going to struggle, certainly. So understanding that maybe the market isn't 10 billion today, but is it at least growing? Is there that category creation that it will be in a couple of years' time? The tech product, your product superiority, at least just having the right team to build it out that you can push up ahead. The go-to-market and the sales motion, we obviously want to see it as a repeatable sales motion that, again, comes into product market fit. But I think that's something that as a team you can pivot on a lot more and will never be consistent forever and ever. You constantly have to update that.
Interesting. And I'm sure that basically all of this translates to some metrics that you guys look at in order to back some of these things up. So what are those metrics? And I think a fundamental question that probably a lot of people will ask, do they differ from startup to startup or industry to industry or market to market? Like if I'm B2C or I'm B2B or I'm selling to SMBs or enterprises, do these things differ, or is it always like a one thing fits all situation?
I'd say there's 4 key metrics that are the same across all industries and all startups. Product market fit is the same it's the same concept for everybody, so therefore the metrics tied to it. But the benchmarks that you'll be compared against probably vary from different industries, different kind of business models. I think the most important one is looking at churn and understanding kind of who are the people that are churning, why are they churning, and then getting it down to what's a kind of acceptable benchmark for the industry. I'd say, B2B software, generally, we're looking at best in class. You'd have churn, less than 10%. In fintech, you're maybe 20%. B2C, ask Google. I'm afraid we're a B2B fund. But yeah, we don't expect you to have no churn ever. And actually, if anything, by the time you've got your product market fit, you almost should have some customers you're maybe looking to fire almost, because if they aren't in that ICP, if they aren't the right pain point for you, that's okay. So I think that's something at Dawn, at least in our diligence process, we'll look quite closely at.
Interesting. So losing customers actually is a proof point to you guys that you, as a startup, you're evolving.
Exactly. I think, again, is it they're the wrong size of customer? Does the pricing model not work for them? Are they using it for a completely different use case and they're going to be calling your customer support every day, asking for, trying to change your roadmap to something that isn't on the right path for you? It's okay to lose customers, certainly. I think then the other side of it, though, is around your upsell and your NDR. And again, we'll start to look very closely at, have you got to these renewal cycles with your customers, and are you starting to upsell them, be that on kind of number of seats, the kind of ideally number of geographies, and understanding, you know, what value is, again, part of the proof that they love your product and what you're doing. So then, of course, NPS comes very closely behind. And so understanding from your customers that they love it. I remember I've been looking a lot at ERP and accounting solutions recently. And I thought accounting, yeah, as you say, boring. Nobody likes it. It's the pay, like nobody likes the finance team in companies because they're just telling you not to spend money. And so that, you know, nobody would be excited about accounting software. Turns out you get the right accounting software, people love it, and accountants talk to each other about accounting software. And so that was such a strong proof point for us that this company was really onto something.
Do accountants also have meetups like this?
I don't know. They write it in Excel tables and send it to each other, perhaps.
Yeah, and then you have, if you don't know how to read it, you're not invited to the meetup. Interesting.
And then I'd say the final metric, again, slightly coming at it from the B2B software angle, is really around your usage. And so what metrics do you have that people are embedding it ideally into their day-to-day workflow? So is it they're using it hourly, is it or monthly, depending on what exactly kind of workflow you want to be embedded in? Are you increasing the number of users across the company? If it's something like a marketplace, for instance, you know, quite often you know that people will pilot your software first. But for example, we were looking in the insurance space, what % of a book was being pushed through a particular solution versus going out, or in the payment space similarly. And again, showing a kind of uptick in that is real strong evidence that you're embedded in somebody's workflow and they're not going to rip it out. Like, we love sticky software. And so whatever usage is kind of relevant for your industry will vary. I guess slightly more on the consumer angle, you'd look maybe at kind of the lifetime value of customers. You know they're not necessarily going to be buying your beer forever. Well, Vedran's probably buying this one forever. So good lifetime value.
Isn't it a good beer?
It is a wonderful beer.
And exactly. And you're in London, where most beers are good.
Yes, no doubt. But it's different. Eastern European beer is different from London beer, for sure.
How is it compared to Prague?
I've declined to comment.
Okay.
I don't want my friends in Prague to see this.
So you're doing a deal with one of the Prague VCs then, that's for sure.
I declined to comment.
Nice. I made fun of GitHub stars before, but on a more serious note, like, what if essentially, you know, a lot of AI startups, like you said, are raising money or like crazy. There's not a lot of proof points, or even, like I said, open source tools that basically go out and say, hey, we've got X amount of GitHub stars, and that's our product market fit. What do you do then? What do you do when there are no, you know, do you go interview the open source contributors, or what's the situation there?
It definitely is trickier, particularly with open source. I think that one, again, though, we're still looking for the high usage rates, and so things like kind of forks, and we can track that. And then you still also get the community around it. So our Discord forums buzzing, are people talking about what they're doing with it? And again, here, really important is that pattern recognition around, are people using it for similar things? Now, you expect there'll be people with hobby projects, but also if you're looking to fundamentally monetize it at some point, you need to understand kind of what proportion of your user base are doing that. Are they using it in similar ways? So it definitely is harder. We have to, it's later nights for us looking at these.
Does that mean you would join a Discord that a company has just to check up on what they're doing and what's the vibe on the Discord?
Again, I decline to comment.
Nice.
But I think it's still fundamentally...
So we need to invest in our Discord. Nice.
It's still fundamentally, you know, you're looking for that urgency, you're looking for that repeatable use case, and you're looking for that same evangelism, and that will manifest in different ways. Again, AI, people are still, you still get that churn, and we know in particular there's a lot of innovation budgets, people are trying things out. Are they renewing at the end of 3 months, say? ideally we'd want to see it maybe after a year you renewing. But I think, again, with AI, some of the timelines are being compressed. But we certainly, it's still the same metrics. We just have to look at them in slightly different ways, definitely.
Interesting. I guess then you have a lot of research you have to do depending on the market and the company. Sometimes it's fun, sometimes it's less fun, like accounting. Sometimes it's more fun, like
Love
open source. Nice. One thing that I know I was originally worried about and then realized that it's just a part of the journey is like originally when we started Treblle, like example, we have an API security product. I never thought we would have an API security product. I never thought we would add it. We have a governance product. Until a year ago, I didn't even know what governance on an API was. So essentially, but people are willing to pay more for a security solution or a governance solution. Is it problematic that you go out with your first product and the initial product you build and you don't find PMF or you struggle to find it? Is it a problem if you iterate? How do VCs look at that, or what's the situation there?
No, definitely. Again, if it was easy, you came out with your first product and nailed it, then...
Has that ever happened, by the way?
Not that I've seen. I'm sure people will tell you that there has, but I think they're few and far between. So yeah, you fundamentally are expected to pivot, be that on the actual product, be it on the customer, the pricing, the go-to-market. All of them will continuously be iterated. I think there are kind of potentially two watch-outs here. The one is if you've pivoted significantly because of one particular customer, you've got very high customer concentration, making sure that you've not got product customer fit rather than product market fit. And so just being wary, particularly if you've got these kind of lighthouse logos, about how much influence they have versus kind of where you view it as where you're taking it. The second is partly around, back to my first slide, and I'm sorry, I didn't realize it was still there, but around, are you just being opportunistic? And so, again, the watch out right now with a lot of AI is suddenly like, oh, AI is cool, let's do something. There are a lot of synergies, I know, kind of with, computer vision companies, for instance, that can then feed into LLMs. You very much can pivot there if it's kind of adjacent. But if you're just if you're losing sight of why there is that founder market fit in the first place, that's when it kind of gets problematic. And if anything, we like, though, hearing about pivots. If actually, you took a product to market and realized that it didn't fit with the right customer, for instance. And so I remember speaking recently with a company building a kind of marketplace between vendors and channel partners for marketing, and kind of come up with the unique insight that actually they were kind of building the product around the vendor when it should be built around the channel partner. And that's given them actually an advantage in the market, and the fact that they could explain, it's still within the marketing space, we're still excited about it, but actually this is our unique insight and that's how we're going to kind of project forward. And that explainability on the pivot made us a lot more excited about it.
So is it even better to have a varying degree of customers at the beginning and not like, if let's say you get a really big, huge enterprise deal, your second day of startup, and that would potentially mean that they might shape the future of the product? Is it better to basically get a mixture and then kind of see what the majority wants versus, because like you said, any enterprise can just, hey, we can pay and we want everything to be customized. Is there a danger of that? Should a startup explore a bit before they kind of sell down, if you will, for an ICP or a customer size or something?
I think that will partly come from your own experience as a founder. Again, as you, hopefully isn't a surprise that pre-seed, seed, you're evaluated on your founder market fit. So if you know enterprise customers well and it kind of your product starting to resonate with them, you can take that proof point to a second enterprise customer, then absolutely not. That it's fine to, you can believe some things are too good to be true at the start. That is okay. But just kind of, again, you will have had your vision for your product and where it's going. it's finding the right balance and potentially, bringing in advisors, for example, that can kind of be like, is it just we're trying to sell to this one person versus is this transferable? If you're in an industry where, there's kind of 4 or 5 very similar kind of enterprise customers, then completely fine. And you quite often see people want to see customers that look like them. If, you're selling to somebody that's very unique in a monopolistic market and you're building for them, if you're looking for a quick buck and building something for them, maybe, but no, you certainly want to be able to have a transferable product.
Okay. You've talked about the founder market fit, and I've kind of seen a lot of founders pivot away from API products to AI products nowadays, but a lot of them are technical. Like I'm a technical guy. I've never done sales before, never done marketing before, branding, well, to a degree. But is it purely just on founders, or is it? Do you look for other people who can help on the team, or is it? Do you think a founder should be the one to bring it to product market fit, or is it okay if a founder hires a really good sales guy or a really good growth guy or marketing that guy or somebody else to help them kind of get to that stage and help them understand a lot of that?
100%. I think, if anything, is a fantastic sign if you've hired those great people around you. And for us, again, when we're investing at Series A and B, we still evaluate the founder, the team, and there, rather than kind of being on an individual, is really about, have they attracted really high quality talent around them, building an environment where people want to work, because fundamentally you're not going to IPO a business by yourself. And so firstly, demonstrating that awareness of where are your spikes and drilling down on what contribution you can make. And secondly, being able to delegate those kind of difficult decisions or areas where you don't have expertise, being willing to let that go is so important. And so, yeah, acknowledging that and then making sure you're bringing in the right people. And also, I think, interestingly, again, when hires maybe haven't worked out, have you been able to make that decision, let them go at the right time and explain why it wasn't the right fit? That kind of starting to build out your bench around you is so important as you kind of get to your Series A and B and kind of really working on your product market fit.
What are some of the roles that you think would be important or early roles that a startup should hire to basically improve the probability of finding product market fit? Are there any specific roles or?
I think it partly depends on you as a founder and where your own kind of spikes are, and partly how many of you are in that founding team. I think one area where we've seen, particularly if you're a solo founder or quite technical founders, having a senior finance figure quite early on can be really helpful, just to kind of take a burden off. And again, they don't necessarily have to be somebody saying, no, don't spend any money, you're not allowed to do that, but just the kind of taking some of the pressure off the budgeting and constantly having to watch the bottom line, being able to slightly have those slightly more forward-thinking conversations can be really useful. Again, the role of somebody in finance changes quite a lot from, a seed stage company through to IPO. You won't necessarily see the same people in that role over the years, but they can be great. And then again, obviously, if you're a technical founding team, maybe you're looking at somebody with more of that commercial experience. Founder-led sales is important. In the beginning, you understand your product the best. You hopefully understand the people you're selling to the best. But making sure that you just kind of delegate out where you feel you need more support and you can double down on kind of what you do best, I think is very...
So is it easier for technical founders to find product market fit, or let's say sales-oriented founders? Who wins at that equation?
Depends what product you've got, I guess.
Interesting.
Yeah, I think you probably, if it's a very technical product, then you can probably evaluate better from the technical side, but making sure you get the right sales motion, I think, is the one that is a bit harder, perhaps, if you come from a more technical skill set versus the salespeople. And I guess we slightly see it with founders as well. Some founders are very good at selling us the dream, and then you kind of peel back the onion a little bit and see there's slightly less.
Could you tell how good of a founder is based on talking to you guys and pitching to you? Do you think that if I really have a good pitch to you as a VC, am I good in sales then?
You can certainly believe it would be,
Beneficial.
Beneficial. But sales is partly about playing back to people what they want to hear, their pain point. I think pitching to VCs is something that you can certainly practice and should practice. In fact, shouldn't be your first time when you're in the room with us.
Nice.
But you also were hesitant if somebody's too salesy that is that going to build an enduring business versus is this a kind of flash in the pan?
Interesting. How do you practice pitching to VCs? Do you just do it by randomly trying to pitch to other VCs and then you mess it up, or do you try to do it in front of a mirror?
Well, I would say the mirror is definitely a good place to start. Get your kind of shampoo bottle Oscar and all
Nice,
that.
nice.
But no, I think as this shows, they're very much communities, and it's the kind of thing that I think. Speaking with other people about their experiences with particular VCs, you hear about people, when you're going out to actively raise your round, maybe don't have your first meeting with your kind of top choice partner. You do take that opportunity to kind of get a bit of feedback on how it went. Ideally, you obviously have advisors around you, your board, for example. I think your board and your early investors are really important as well in helping you get to the next round. And we say it, we quite often talk with people about what are you funding at Series A, and we're funding you to Series B. Like, we want businesses that are going to make it there, and then we'll support as well in making sure you're set up for the success there.
Interesting. Once you've actually reached the product market fit, what does scaling that look like? Is it simply a matter of adding more people to the fire, like you guys like to say? Or I think Nicola mentioned, you continuously evolve not just the product, but the message, because the market changes, because the market conditions change. And as well, there's competitions you always have to adopt. So is it ever easier? The question.
I would love to tell you yes, but I feel that would be a lie. So certainly once you've got that repeatable sales motion, that's what we want to see. We want to see more people continue doing what you're doing. But as you say, markets don't stand still. And so you very much need to keep one eye on it. And so going back to the startup that I worked in, we were in the event tech space. Everything had pivoted to being online overnight. There's this small company that might have maybe once been valued at 8 billion called Hopin that we very much had one eye on as, the big competitor at the time.
So they were a competitor to your startup?
Yeah, they were a kind of side-by-side competitor. My company, they're still around. Well, yeah, here we go. The crucial part. Grip is still around because we saw that COVID happened, everything went virtual, but Grip very much had a view this isn't the new normal, that we'll go to hybrid events, and they're coming back. And so even though we were still making fantastic sales on these virtual events, already we were thinking, what's a hybrid event going to look like? How do we make sure our platform is set up for that as the next stage, versus, dare I say it, Hopin went all in on virtual events. That was the future.
How did it feel looking at them raising billions of dollars and winning short term, and you guys playing a long term game?
Yeah, it's tough. I mean, obviously, you want to be there, the big, exciting raises, the headlines. But I think you have to trust in your own kind of vision of where you're going and that you're kind of playing the long game. And actually, one founder said to me...
Believing in founders and the vision and everything.
Yeah. I've heard, and now I've kind of adopted it and want to spread, that winners focus on winners, losers focus on winners. So you've got to... If you're worrying what your competition's doing, then you don't have time and capacity to think about what you're doing. And so, you do have to have that awareness, certainly. But if you understand the market around you, then you're making those right tweaks. As we also heard, different markets behave in different ways. And so the German market, for example, I guess we think at some of the Dawn investments, that we've gone all in on payment terminals now twice. The German market is very cash heavy still, and so what you would do if you were entering there is quite different from what you do in maybe more kind of card forward countries. And so you product market fit, you get it once, and you have to keep nudging. You enter new markets, you keep nudging. So yes, I'm afraid it's not over.
So it never gets easier.
Well, bits might. You tell me.
Yeah, I can tell you it never gets easy. And then I haven't seen that day yet, but maybe.
I heard being CEO of a public company is
Yeah.
super easy.
Maybe,
So
let's
just
see.
get there.
But yeah, I'm still dreaming of that day that we don't have any problems, don't have to do anything, or then have to justify our product to somebody. But yeah, I don't want to spend any more time dunking on the German market, but it is the worst. That's for sure. I'm wondering if anybody succeeded in a German market. Did you? No. I'm okay. Yeah. Let me know if anybody did. Let me know the secrets. So to close this off before we open it to questions, so I'm giving you a heads up, all of you, so you can think of a good question. Last year was horrible to raise, and traditionally I usually ask everybody who sits here, like, what do you think of how this year looks like for raising, for startups, and any advice for anybody starting or even wanting to get to a Series A? I feel like the action is back in pre-seed, seed stage, and maybe the action is back to Series A. I know you have a huge fund, so that's a lot of money you guys have to deploy. So what's your kind of take on the current situation, and of course the AI craze?
So it was a difficult year last year also if you wanted to invest in companies. It was a slow year, I think, for everybody. We definitely are seeing the market picking up. Obviously, AI in particular made pre-seed, seed hot towards the end of the year. That will start to trickle through for us to A's and B's. But you also don't need to be AI to raise. I think you do need to have an awareness. Don't sit in a bubble and think AI is never going to touch your company, because that's obviously very naive. AI should be part of your story, but it doesn't need to be just your story. And actually, if anything, as we said, it can be very difficult to build an enduring business there unless you've got a kind of very strong vision. So we're definitely excited about this year. It's been a busy year for Dawn already. We've done 3 deals so far, 2 announced, 1 coming very soon. I think it's a good time certainly to be raising. In terms of if you're going out to raise, I would say really, it comes back to the basics. What is your vision? Can you show that this is a fantastic market that you're going after and you have that right to win? If you're coming to A, really show off that strong product market fit, your evangelical customers. I think the basics of raising should never change. It's the environment around. And, great companies will always be funded, the likes of, Airbnb, GitHub, born in the 2008 financial crash. And so, things do always get better again, certainly.
That's interesting. And how many deals do you guys usually do per year?
Oh, it varies.
Okay.
Obviously, in the height of 2021, we did quite a few. But no, we're probably looking to do, 6 to 8 deals a year. As you said, we've got 700 million to deploy, and we all can't wait to do that. So.
And you usually follow on with the rounds?
Yes, absolutely. So our 700 million is split between kind of our main fund and then about 100 million in follow-on, where we very much will double down or participate in secondaries to be able to really take ownership in the companies we're excited by. And as I mentioned, we go right the way through to IPO.
And you're the right person for the CE region. So anybody wants to talk to Skye about building a startup from CE, just ring up Skye. I appreciate the conversation. Thank you. I've personally learned a lot, interesting things. Now I'd like to open it up for people from the audience. I don't know if anybody has questions. We'll just hand you the mic. It's very important for Ivan and Matteo for you guys to have the mic. So yeah.
Sorry, I've got 3, but they're short and pointed, I promise. So first, you were talking about 4 metrics. And sorry, I'm Fran, co-founder of Turnio. So you were talking about 4 metrics, and I've written down 3. Churn, upsell/NDR, and maybe there are 2, but third one, usage. Did I miss one?
NPS, Net
NPS.
Promoter Score. That's, I know, probably quite a consulting way of doing it, but how much do your customers love you? Would they tell other people about
Evangelists.
you? Evangelists.
Got it.
Yeah.
Thank you. Second question was around, revenue and enterprise deals, or what revenue are you looking at usually in seed round? And I ask that because in VC conversations, I'm seeing a lot as we pivot from SMBs to enterprise. A lot of the VCs don't understand that the revenue in enterprise takes longer to realize. So if I'm from my pre-seed to seed in 18 months, let's say, there's a huge potential and they're growing in revenue, but they haven't realized the full revenue potential. So how do you approach seed stage startups in enterprise, and what revenue metrics are you looking at there?
It's a tricky one because I admit we're not seed investors. And so I think you would hope that your seed investors should know that enterprise deals naturally take longer to close. In those cases, and we still do see it and particularly in very slow moving industries, kind of if you're able to show kind of letters of intent at least with these contracts, or evidence that people are engaging strongly with the process, if your kind of potential prospects are willing to speak to your investors, because quite often we find with enterprise customers, they kind of want those proof points of another enterprise customer to be able to buy in, or quite often having high quality investors on your cap table, again, is a good, strong proof point for enterprise customers. So,
Maybe I can slightly.
Say, you've raised your seed. So what revenue are you at then?
It seems like you're doing a pivot, right? Which we've talked is fine. I think one proof point is a pipeline. So if you have a pipeline, even if it's speculative, I'm assuming that pipeline for enterprise is going to be, 5-10 times bigger than an SMB pipeline with less deals, right? So I think that for us, every time I go into a board meeting and, I show a couple of companies in the pipeline that are big logos, as these guys like to say, they're very happy and excited. So I think, of course, at the end of the day, you have to close one of these. But I think, like Skye said, a lot of investors understand that. It's all about you telling that story of why didn't it happen this quarter, why will it happen that quarter. And I think you and I talked about predictability. It's very hard early stages to predict these things, especially if you don't have a lot of control over the other side. So yeah, that's just my 2 cents.
Thank you. And sorry, just last one. I won't hog the mic anymore. You talked about category creation, or you mentioned it. And when we talk about market size and the budget that a company might have, in a category creation startup, they don't have the budget because the category doesn't exist for it. And they start spending on it, but how do you I can't show you a budget because they're like, wow, this is new and I'm getting budget now for it. So how would you approach that?
Yeah, so usually I guess you get the innovation budgets quite often, and then to get from innovation budget to real budget, whole different ball game. So I think we would view it as kind of having those open conversations with people about what does success look like, understanding who would be the decision makers involved in that kind of budget creation process. If you can start to obviously demonstrate ROI, then that's the way that you get budgets for things quickly. So again, if you're in that kind of category creation, you understanding, okay, would this be a headcount reduction? Would this be a revenue driver? Is this a kind of a cost saving? Being able to play that back and kind of guide people through that journey of why will this be a must-have for your business? And if you don't believe it will be a must-have for your business, then that's when the pivot kind of comes around.
And also, I'm sorry, I'm hogging the mic, but like we've heard firsthand, like example, like when we talk to like these bigger banks. I'm not saying we talk to BNP Paribas or we aren't, blah, 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 disclaimer. But they, for example, have a $7 billion budget this year for AI, a category that, 8 months ago didn't even exist. So, if the product is hot or good, they'll make money, I guess. Anybody else?
I have a question. How do you value products which are basically based on brand, but they're still startups? Because I had some clients which were like CBD infused gin with cannabis or stuff like that, and it was a nice story. So it was at that point it was kind of like a new thing. So the story got big before the product got big, and then they got investment based on the story basically. So now I have a new client which is basically in a similar position, and we're like struggling between, okay, do we focus more on the brand and the story, or we go more for like, okay, better product? So how much does it influence your decision if there's already a kind of buzz going around the product?
Yeah, I think in consumer, obviously brand is king and comes before. And again, to throw out the vintage examples, when New Coke came to market up against Pepsi and it got scrapped because Coke is the brand that sells, not Pepsi. So at that point, again, you're selling a story. Your story will be sold to consumers in the same way it will be sold to investors. Full disclosure, we are not consumer investors, and this is, I guess, from my own like angel experience, but you buy into a brand in the same way that consumers typically will buy into a brand as well. Obviously, don't sell them terrible products. Like bad reviews can tank a brand pretty quickly. But yeah, I think particularly at the early stages, people buy into brand vision and consumer. But again, that's kind of personal opinion there.
Anybody else? So before he asked the question, there's another guy called Vedran. Vedran from Microsoft comes in and tells Skye, we're like the only two people named Vedran, and she's like, I already met Vedran today.
I'm Vedran at Fanoa as well. I'm like, is everybody called
She feels
Vedran?
like everybody's called Vedran in Croatia.
Are there any other veterans in the room, or have I got the only 4 in Croatia?
So basically, my question is, going back to the matrix, to the scoreboard you showed earlier. There's a traffic. There's what's amber, yellow, green, right? But do you have any more specific metrics for each of the metrics you're measuring there? So, for example, one of them said, I think it was like a superior product, right? But you can be sometimes biased about what's a superior, whether it's good, average, or perfect. How do you pretty much evaluate these metrics that you can kind of, tell them it's average, good, or,
Yeah, it varies by them. I don't know if I can have them back just to
Ivan
think
will
about
make it
them.
happen.
But,
It's already back.
yeah,
Just turn on the
I
projector.
can just see it.
Yeah.
Just what I say. So market, I guess for us, will go like less than $1 billion, multi-billion, is quite good. Budget, again, we think about like, can we name the budget holder, what that budget is? And this would be something that, as investors, we can look at through customer calls and speak to people, versus, you kind of intuitively will know partly through who the buyer is as well. When it comes to the product superiority, again, that's kind of twofold. You're trying to understand what would be the KPCs, key purchasing criteria, and are you 10x better on any of them? Which, is it kind of particular features and functionality? Is it does it faster? Again, it will vary from product to product. In terms of the internal capabilities, again, it slightly varies on your product. In the case of consumer, do you have some branding superstar on your team, versus if you're in AI, do you have kind of PhDs in various things? I think quantum computing, we're even looking at like, do you have a Nobel Prize winner on your team kind of thing? Like, so again, it varies.
So do they have Nobel Prize winners?
Well, most quantum computing startups, turns out, have some Nobel Prize winner in there somewhere. So if they're not there, then maybe avoid
Fun
it.
fact.
And then the kind of the go-to-market motion, this one is slightly, we think about this slightly more when we're doing it with our portfolios, like how do you expand your products, and like, is it the same buyer persona? But yeah, if you are consistently selling to very different people or if they're not the budget holder as well, that can be tricky and put them maybe more in red. And then the sales motion, again, is a slightly more holistic. I basically feel I've just given you a waffly way of saying there's not many hard metrics on this, but we have, again, as Dawn, we have a slightly more like blown out version of what we would look for as the proof points.
So you have like internal benchmark of these existing portfolio companies, and then you can compare them to...
Yeah, exactly. We can look at other comparisons as well, or the different holistic metrics within them.
Interesting. Cool. Any other questions? Who? Oh, Peja. Give the man the mic.
Thanks. Nice to meet you. And I mean, given that you're focused on Central and Eastern Europe in a way, and you're from the UK, and as far as I'm aware, Dawn is an active investor taking the board seats. Can you maybe comment on or provide some tips for the founders here, kind of like among the differences in the board setting between founders from the CE and the UK, and what would you advise founders here to do in that situation? Thank you.
Sorry, as in kind of how we work with the founders? Or?
Exactly. What can you improve, kind of like between founders and the board member, in this case, investor, right?
Yeah.
Is that maybe kind of like being too defensive or thinking too much about the engineering or whatever?
I think you and I slightly mentioned that before about not being trusty, not trusting the VCs enough.
Yeah,
Oh,
no. No,
I was
I
actually
think...
working for a Dawn portfolio company before.
Oh. I would say, firstly, even within a fund, different board members have very different personalities. And so very much as you're going through your raising process, make sure it's a two-way fit between you. I think one of the experiences we've had, and we at Dawn, again, I can only speak from our experience, we've got a very diverse team, both in terms of kind of different countries people are from, gender diversity. We're 50% women on the investment committee, which is certainly few and far between. And so I think are able to understand, different cultures, different personalities work in different way. I think one thing we very commonly find is if you speak to a CE founder and they tell you they're going to hit a number, they will hit that number. It's never sandbagged, it's never over, it's bang on. And so very much you get that trustworthiness versus sometimes the particularly good salespeople perhaps tell us we're going to shoot for the moon, or the converse will maybe sandbag a number so that they get a round of applause from the board every quarter for outperforming. I think, as Vedran mentioned, VCs, just understanding how to work with VCs is something that maybe is slightly more mature in the Western European ecosystem. And so it's kind of a two-way thing, understanding how we can best support. And again, it's a two-way conversation, that one, understanding what can we help. I think we find, again, perhaps to your point earlier about as a founder, should I be doing everything by myself? And actually, no, your board is very much there as a sounding board for you to kind of get advice, to put you in touch with the right advisors. And so it's kind of okay to ask for help from them. And similarly, ask a lot of your board back. And for example, we hear from some of our portfolio companies, investors ask for particular pieces of analysis, and they're like, well, it's going to take me a day to run these numbers. What am I getting out of it? And so being able to kind of push back as well. VCs, obviously, it is venture capital. We're obviously interested in big outcomes, but we want to work with founders that are interested in big outcomes. And so everybody is there to support that journey all the way through. I don't know if that's answered your question at all. Or
especially interesting element is kind of like, do the startups from CE get discounted before the investment is made, because the projections, they're going to hit them, right? Compared to some from the Western world that could be super ambitious, but the likelihood of hitting them might be a bit lower.
Yeah, I think that's something that we're kind of conscious of, and a lot of the CE businesses are very efficiently run, and partly there are obviously salary costs in different regions are different, and also that perhaps that conservatism. I think one thing that's been quite interesting, and maybe partly because the VC ecosystem is slightly newer in CE, that a lot of companies bootstrap for quite a while, and so they can get 6 million ARR without taking on capital, then look to raise a round. And being able to switch from that bootstrap mindset to invest for growth is something that, particularly if you've bootstrapped, we really need to understand what the plan is and how are you going to kickstart that growth. And so at that point, throwing the conservatism out the window and really being like, no, this is my plan, this is where the dollars are going, and kind of being punchy on that is one thing that we kind of have to tease out of people a little bit more, versus perhaps in Western Europe, people will go out and raise a pre-seed when they've got an idea and a PowerPoint drawn on the back of a napkin. So I think, but also, if you're going to raise VC money, you want to go global, but again, those are the founders we're trying to accelerate. And so, yeah, aim big, sell us the vision, take us on that journey with you. And I think, yeah, we're very much here and excited about it.
Any other questions? Nice. So it's pizza time. Thank you all for coming. I think they're gonna bring out the pizzas in a jiffy. Let's let Skye eat a pizza for like 10 minutes, and then she'll mingle around, listen to all the billion-dollar ideas.
I've got my checkbook with me,
Exactly.
Give me a few beers and millions are yours.
Yeah, she left the money in my office. So, in any case, really enjoy it. And again, if you guys have any suggestions or feedback for us, please let us know. We always want to improve. Find the guy with the bald guy with the glasses. He's the only bald guy with the glasses, and tell him what you think. Thank you. Thanks again, Skye.